All right, quick recap here. So markets bounced yesterday. We had the S&P and the Nasdaq, especially the Nasdaq up, mainly led by NVIDIA. My short position took a bit of a hit yesterday. I think I'm down 10% on my short now, although I was break even when it came all the way down to 400. But I'm not really sure why. I think it's just a buy the rumor, sell the fact build up to earnings, which is after the close on Wednesday. So I expect a bit of a leveling off today, maybe a small red on NVIDIA, and then we'll see. It's Wednesday after the close. If there's bad news, then it should absolutely flush back down to 400, to be honest, and then keep going down with the markets. I think the markets will go low. I think NVIDIA will lead that if that's the case. But I think the markets will start going red regardless of NVIDIA. But if NVIDIA has blow off earnings, I think it'll be a blow off top. Actually, I think it would be a reversal. I think some smart money will sell into that because everything is just too perfect for NVIDIA, and you're in a recession in lots of countries now, and yields are making new highs. I mean, why would you buy into good earnings news? Imagine buying that blow off top. That's kind of ridiculous. But a lot of NVIDIA has been ridiculous, the valuations, in my opinion. So let's look at the markets. S&P bounced. That's what I thought, because of this Friday close. I mean, it was basically unchanged despite the color here. So we had a bit of a move higher, some continuation on Monday. Makes sense. I think we're going to stall and come back down again and basically flush along with some news. We do have a lot of news today, not too much, I believe. So Tuesday, not too much, but Wednesday, I think we have some PMI, some new home sales. So there's a bit of news on Wednesday. And then, of course, we have the Friday, what is it, Jackson Hole. We've got the Feds talking anyway, mainly on Friday, but I think it starts on Thursday. So end of the week will be some Fed speech. And it's not just Powell, you've got Lagarde, and there's always other central banks talking. And that the currencies are really affecting the dollar of those other central banks. So there's always news, actually. So overall, S&P bounce. I think we're going to level off here and come back down and create this right shoulder I've been talking about for ages. And we could maybe even add this little thing, descending line, to see where I think the slope will end before we hit the neckline and flush. That hasn't changed. I thought we'd come all the way back here. I thought we'd bounce today. And I think today, it could be a sort of sideways day, but towards the end of the week, down we go. I don't believe that the Feds can pump us into a stronger right shoulder, but if they do, it'll just be a stronger right shoulder and down we go. Nasdaq, same sort of thing, has come from lower. Yeah, just sort of same thing. I'm not even going to bother with it descending. You know what I mean? It's just going to come over here, and then boom, as soon as we hit this larger ascending, especially here, once we close below 355, that's it. Like, that's the right shoulder, which is way lower than the left. The neckline broken, close below, lost the ascending. Down we go to under 340, and we'll take it from there. Dow Jones, not the strongest candle. It was red, it was sideways. Yeah, I think this will just be a weak bounce with the rest of the market, and down we go. Russell, even weaker, despite this late strength. That is starting to look pretty weak, actually. Imagine a small curve here and just goes back down and starts to close below 182, especially 180. That would really do it. A close below 180 for the Russell. I don't think it can be saved. And down we go to the absolute bear market lows pretty quickly, actually. Now let's look at the banks, because the banks, I think, is what is going to lead us on the way down. I think these high yields are just any day you can have. I saw something about Charles Schwab just really owing a lot of money soon. I think they called it the September Lehman. I believe that. So watch out. I mean, seriously, yields this high, institutions are going to go bankrupt. They're just not going to be able to make their payments. Look at China. I mean, and that's just China. Look at the US yields. I mean, we're going to get to that in a second. But for me, banks are the weakest. Therefore, Russell is the weakest. And I think it's just going to be like last time. And the yields are just where they were last time. So look at this XLF. Weak bounce. Yeah, I just expect like everything else, but even weaker here, just weak bounce, and down we go. KBE and KRE, the most fragile of them all. Look at them holding their ascending, and they're ascending a lot. There's a lot more pronounced than the other ascendings. If I look at, okay, not so much the Dow, but well, anyway, look at the KBE and the KRE. They're very close. Look at these patterns here. They're touching. It's very credible. I think a lot of people have these trend lines. And, you know, once you close below, in this case, the KRE below 44, KBE below 38, then it's really a sure thing. Like you've lost support and you have to go back down several percentage points. KBE 35, KRE, you know, 40, big round number. And by then you're going to have the Russell pretty much around here, around the 170 zone. And then it just takes a little extra and you're all the way back down to the absolute bear market lows. That can happen really fast. And if there's one bank that goes bankrupt, one of these small, or even a big boy, I mean, it happens in a week, maybe just 3 days. And then where's your NVIDIA and all these S&Ps and whatever? Let's look at yields. For me, the absolute most important thing, I said it every single video, I say it again, the 1 year starting to creep up. That's just really gone sideways for a while, but I think that's just because it's trying to slowly catch up with everyone else. Now, the 2 year, big green day yesterday, today is just, I mean, the day is so young, it doesn't count, but look at this close a high of day. Is it today? It'll be this week. Depends what happens, you know, with the Fed speakers. But for me, this is destined to just break out. Can they delay it somehow, just jawboning something? I don't think so. I think the market wants higher yields because inflation is going to go higher and they expect the Fed to have to go up and match it. And if inflation is good, is stronger than they expected, then the whole narrative of the last couple of weeks, you know, or months rather, that the Fed has it under control, we're at 3%. No, we had a bit of a drop. Obviously, they fudge the numbers, but I think they're not going to be able to fudge the long-term numbers that they're rising again, and yields are just going to have to creep higher, and the market's just going to have to collapse. And remember a few months ago when people said that the Fed wants the market to collapse? Well, does it want it now just because the market's come all the way back up? Well, yeah, it wanted it back then. Well, it doesn't want the market to collapse. It wants inflation down. But if the market has to collapse to do it, then so be it. And the market's way higher. So if it didn't care all the way back then, why would it care now? So for me, the market will collapse because rates have to go higher because inflation's going up and then they don't have it under control. And the dollar, by the way, will have to come down because of that. So look at the 5 year close a high of day. That might even do it today. New record high of the bear market above 4.5 close, 10 year. It did it yesterday. That's the 10 year. That's the big one. That's the most important one. I think the 2 year is the most important one, but most people think it's the 10. So there you go. Look at that. Completed that round curl. Off we go to 5% maybe. You know, if you zoom out, what does that look like? If you really zoom out, let's do the weekly on the 10 year. Look, we've just hit a new high now. Where's that going? Probably 5%, probably 5.3. You know, long term, this isn't over in a couple of months. This could last years, this stuff. So buckle up. Unbelievable stuff. 30 years, same thing. So we hit new highs. Now the market needs, I don't know what this market rally was yesterday. I predicted it, but you know, the Nasdaq being up 1.5% led by NVIDIA, it's ridiculous stuff. So that's a great opportunity to sell into that. Let's look at the other yields. Look at the EU, just 1 or 2 days away from new highs. The EU's toast. Britain, there we go. We've just made it. The 10 year back, the 30 year, maybe 1 or 2 days away. Just what I said last week. I mean, yields are going higher. And that, again, is because inflation is not over. It is making a return. You had this temporary dip, just like a stock chart. You know, imagine something breaking out. It's just retracing. Now we're going to go back up. Remember, there are delays to rate increases also. So it's like 6 to 12 months later that you start feeling it. So rates are going to go higher, and the market is not even feeling the effects of rate increases from a while ago. So it's, I mean, almost so obvious. Let's look at the dollar index. You know, one other thing. Look at this starting to roll over. This is extreme resistance. It should be. And now you can see we're stalling out here. I think it's a better stall out than at any other moment. Look at this time here. For me, this is going to roll over and you're looking for a close below this ascending, especially below this horizontal. A close below 102.8 for me would really signal, okay, back down, we go to 102, and then we'll see. You know, I said we might have a small bounce and then we'll see, because we're going to have these descending lines continuing their impact, you know, so we should start to go back down, maybe bounce, fail, and then down we go. Because if yields are going higher, that suggests that inflation is not over. And how can the dollar be that strong? I understand everyone flocks to the dollar. Imagine the market collapses, everyone flocks to the dollar. But fundamentally, really, after the short-term bounce and all this reactive trading, you can't really go too long the dollar. Bonds are getting killed. That's what yields going up is. So maybe gold actually is the place that a lot of institutions are going to start to flock to. So I won't spend too long on the dollar. For me, it needs to come back down. It's starting to do that. Again, a market crash could revive this pump, but I think we're going to go down to 102. Okay, let's look at commodities. So copper, sideways action. Yeah, I mean a little higher because market was up, maybe dollar was sideways. So nothing too crazy. Stuck between those two magnetic forces, let's say. Natural gas yesterday, nice move. Look at this bounce, final bounce here on Friday after descending, moved up but lost a bit there. So it's probably not ready to break out higher. I think we're just going to get a bit of sideways action until we break out of one of these two lines, break down below this or break out of this. I favor the break out of this descending. And remember where this one stretches out from. That's this huge one. For me, it's due to go all the way up, back up to 3, close above 305, squeeze to 4. That hasn't changed. Let's see if a market crash changes that. But for me, natural gas doesn't care about the dollar or market forces, actually. Oil, there's that bounce on 79. And now let's just wait and see. Does it want to drift lower? Because if there's a market crash, oil tends to go down with the market. The dollar index, is that going to have an effect? Yeah, but not as much as the market. So I think oil naturally wants to go all the way up, especially look at this move. This was beautiful stuff. We had the ascending, we predicted it the whole way, to be honest. Now we've dropped back down to 79. Let's see what happens. I'm not sure whether it wants to continue where it naturally wants to go. Does it want to retrace more before trying that? And by the way, what will the market impact be? And I think the market will go down in the next 2 or 3 days. Maybe oil can tell. So, and how much oil supply will there be, or oil demand will there be if the market's collapsing? Uranium, unbelievable stuff. Look at these two candles. Reminds me of this candle down here and these candles down here. Uranium wants to go all the way up. It broke out of this. It has the market has an effect on it, so it sort of delays its pump, but naturally just wants to go, I've said it, it wants to go to 30 and squeeze to new highs. So uranium stocks were amazing yesterday, and it's painful to watch them when you're not in them, to be honest. But uranium, just absolutely amazing. Will the market collapse? Will a market collapse delay or destroy this massive breakout it wants to do? Yeah, but that's just temporary, I think. Use the dips to buy. All right, gold and silver. So gold was finally doing its curl here, which is what I expect. I expect us to move up 1940. That's what the chart to me says. It says, we've broken out this descending, okay, with the dollar sort of losing its strength. So I think the dollar index will go down to 102. Actually, I think gold will really pump higher on that. I'm not sure about what the Fed's, obviously the news, you can't tell the reaction. The Fed speak later on this week. I mean, you can't predict really the market reaction, but the chart says it wants to go up, at least retrace some of this drop, maybe prior support. So 1940, I think, is where it wants to go. Once we close above 1900, that should allow us to go further, at least 1920, I would say, but 1930 to 40 should be where we end up stalling if we do go up. On the way down, I've already covered it, prior sort of resistance around here. So I would say 1860-ish should be pretty decent support if there is news or surprise Fed speak that takes us down there. But I think 1940, so 1860, 1940, and I think we've broken out, Now, on top of that, you've got silver, which for me has been the decider for gold. Look at this massive move yesterday. I think it was 2%, 2 point something percent. It was very impressive. Yeah, 2.25%-ish. I haven't even looked at resistance on silver, actually. This is old resistance. To be honest, I'm going to remove that old resistance. I would say here, which is where I have the blue target, just because of these candles, nothing really special. And after that, I don't see too much. I mean, you could say the old high of here, but just these candles over here, it's pretty hard to tell. I would just say here, actually, $25. So I would say just below 24 and then 25, nothing too special. And obviously 26, the high after that. That's been there for a while. But silver's pretty impressive. And to be honest, if gold can start rallying to 1940, which is a decent, how much of a percentage move is that? 1 to 2%. Yeah, silver can definitely outperform that. I mean, forget 2380, that silver could do maybe even 2450, 5%. So actually that's where I used to have the resistance because of this one over here. It's hard, actually. It's hard to call silver. Maybe, ironically, silver will run into resistance when gold does this time. So I'm just going to leave that anyway. So let's see. But silver very, very strong. It kind of, for me, confirms that gold should bounce and catch up. And I think gold will. But obviously, we need the dollar to roll over, but I think it will do anyway. All right, let's look at the miners. They were also up because we've had periods where gold and silver are up, but the miners are red. Now, obviously, we've got some catching up to do, but it's for me, it's very, very strong reversal stuff. But what about the market? Is it influenced by the market? And what if the market rolls over? What if the market goes down and gold goes up? Where do the miners go? I think the miners will start to follow the metals more because of the banking crisis. That's what happened before. I think there was a bit of a delay, but then the miners started to catch up. So I think that will happen today. And I think the next banking crisis, which is upon us now, I mean, the next market crash will be led by another banking crisis. So GDX next resistance is 29. We've covered all the resistance points, but look, that's a very nice reversal. So I've covered the support and resistance in every video, including the one I did, I think, yesterday. So yeah, resistance up here, support down here, good reversal signals. It's only up 1%. GDXJ is stronger. So was the candle on Friday. The reversal signals were even stronger. And so is the follow through today. Look at that resistance is just here. I don't count this as immediate resistance because I think it will go actually higher. I wouldn't be selling this if I bought the low. I did actually add to my miners on Thursday and Friday. So I wouldn't be selling here the GDXJ related miners. So up we go in the miners, up we go in gold and silver, down we go in the dollar. Yields up we go, markets down we go. Though look, we have news, we have Fed speak, we have big earnings from NVIDIA, and we have geopolitical tensions. Other countries have their own data and news and FX swings. So there's lots of moving parts. It's hard to call everything, but that's why I like to look at charts, because everything is in the chart. Everything is priced in. A picture paints 1,000 words, and it's not guaranteed, but it's higher probability. Anyway, Bitcoin actually worth covering. So there's your little bounce around 25,000. It'll stall. It'll probably go down with the markets. I think the markets are going to go lower. Look, it wasn't exactly the most beautiful day yesterday, and that was with a Nasdaq high, strong 1.5%. So for me, Bitcoin, and by the way, lots of rumors of Binance going down. Look what happens if Binance loses its 200, which we might even do today. Let me zoom out. Look at this. If we lose about 200, or maybe, let's be honest, a little lower, this thing could really take down the Bitcoin and the altcoins a lot. That's an ugly chart. There's no strength there. So I think Binance, I don't know if Binance will lead the way, but, Binance is weak. Ethereum, that could also come back down, test its critical support zones. But, Bitcoin itself, that's the most important one. Once we start losing 25,000, we're going to 20,000. And what if the market starts to collapse then? I think Bitcoin can go below 10,000. Actually, it's incredible how, momentum can shift just on a couple of candles. Bitcoin is looking really strong up here, testing 30,000. And then a couple of weeks later, looks bad before the market collapses. And now I think the market will collapse. So Bitcoin all the way back down, cut in half in a couple of weeks or months. Anyway, that'll do. Good luck today. I hope that was useful. And let's do another video tonight or tomorrow morning.